So much positive it feels like going on, and yet the amount of caution appears to be growing by the day. Do you match that, or how do you see it?
I think you're exactly right, but I think what's so great about this environment is that it's obvious we needed a correction in certain areas of the market, and that's exactly where it's happening. The average IPO for the month of April is actually down 10%. That's what should have happened. Things got way too easy. We talked about this last week. 97% of the S&P 500 was above its 200-day moving average last week. It's unsustainable. You can't have every stock going up every day with no pullbacks. The S&P was up 11% year-to-date on Friday. Russell 2000 up 13%. We should have a pullback. But what's so great about this, McDonald's is at an all-time high. Target's at an all-time high. Costco is ripping higher. Walmart is breaking out. You have a little bit of a pause in the reopening stocks. So they take some momentum out of the XHB names, the home builders. They take some momentum out of the airlines and the cruise names. That's fine. These stocks are up huge. And then over in tech land, they're hitting the Twitters, the Snaps. That doesn't matter. These are medium-sized companies. They don't really matter. So I think if you're going to have a correction, and you're going to have it focused in the most overvalued, overheated areas like IPOs, like mid-cap tech, no problem. Bring it on. I hope they take it even further.
Okay. But, Tiffany, the real question then becomes whether the correction that Josh is talking about, rolling in some areas like IPOs and SPACs and some other areas of the market as well, if it broadens out, right? And you already have something like 90% of stocks above their 50-day moving average. People saying, oh, the market's so overbought. Is there the risk that the pullback that Josh is noticing in other parts of the market becomes more widespread?
Yeah, so I think overall, Scott, I'm really bullish on the outlook. And so I definitely understand what Josh is saying, but I'm thinking about data, March data that was released last week, and really three things in particular. Why I really think that this overall recovery that we're in does have staying power. So I'm thinking about increased earnings. We had an amazing blowout from banks last week, and I think that we're going to see that across the board this week and throughout the rest of the earnings season. Increased inflation, which is really, the CPI was released, really growth, right? And so while there's some potential issues with that down the line, I do think that that's a sign of growth for us. And then also increased demand in the way of consumer spending. And so when you look at what, the retail numbers were released for March, were released last week. So they're up almost 10% from February, right? So that's the second fastest monthly increase in 30 years. And so people are buying big ticket items, right? So car sales are up 15%. Restaurants, even though that's not included with the retail sales, restaurant and bar sales up 15%. And while a big driver of the spending was the $1,400 stimulus checks, I'm looking at the personal savings rate, the fact that that's double what it was pre-pandemic. Household net worth is at all-time highs. And I think that consumer spending and the fact that they have the money to spend is going to really kind of push us and continue the expansion of this growth.
Yeah. I mean, Doc, just because you have a booming economy, and we're going to do a massive GDP number, and we may do another massive one after that, and after that, and after that. And we're going to add maybe 1 million jobs a month for as far as the eye can see at this point, because we need to get back all the jobs that we lost during the pandemic. That does not mean, though, that stocks can just continue to go straight up like a rocket ship, right?
Right. And you started to see it wasn't just the small caps, but many of the stocks I'm about to name, Scott, would fit into that category. But you saw the reopening plays, the airlines that were expecting to be able to travel to Europe and get those higher ticket flights rather than just leisure flights in the United States and so forth. Carnival Cruise Lines, American Airlines, United Airlines, Sabre, PK Hotels, the whole lot of them. You're seeing those chinks in the armor a week and 10 days ago as those stocks started rolling over. Now, that has accelerated in the last week. So those stocks in particular, Scott, are down somewhere between 10 and 20% in a week. I mean, that's a pretty massive move. And it is because as much as we're optimistic, and Tiffany and Josh made a good case for that, as did you, I think the issues are also, are we going to get that synchronized global recovery? We know it's not synchronized yet. Now, does it get synchronized into the next 2 or 3 months as those vaccinations pick up speed in Europe and maybe things come down from our travel department as far as, you know, hey, yeah, it's safe to go and you're not going to need a vaccine passport and blah, blah, blah. If that starts happening, Scott, then yeah, these stocks will hit a bottom. And to Josh's point, for all the people who've been waiting, now's your time. Jump in there and grab them. On the other hand, catching that falling knife is never easy. And when you're seeing those guys rolling over, then the next question is, well, are there other areas that might sort of not feel as robust about how it's going to be over the next quarter? Now, a year from now, fine. But not many of us are able to have the fortitude to hold through a significant drop and then say, oh, yeah, but a year from now it'll be fine.
Yeah.